One crypto platform just exploded in usage, without VC hype, without influencer shills, and without paid ads. So the question is Hyperliquid's growth truly organic? Or is this just another hype cycle waiting to collapse? Today we break down the real data, real incentives, and real risks behind Hyperliquid's rapid rise. Disclaimer before we start. This video is for educational purposes only. Nothing here is financial advice. Crypto trading involves risk, and you should always do your own research before making any financial decisions. Hyperliquid is a decentralized perpetual exchange that came seemingly out of nowhere. No token at launch, no massive marketing campaigns. And yet daily volume surged into the billions. That raises a critical question for investors, traders, and builders alike. Is this real product market fit? Or just temporary momentum? Part 1. What makes Hyperliquid different? Unlike most decentralized exchanges, Hyperliquid doesn't rely on an external blockchain. It runs on its own custom layer 1, optimized specifically for high-frequency trading. This gives Hyperliquid three major advantages: near-instant execution, low-latency order books, and a user experience that feels closer to centralized exchanges. For professional traders, that matters a lot. Part 2. Organic growth signals. Now let's talk about organic growth, because this is where Hyperliquid stands out. There was no token incentive at launch, no liquidity mining, no farm and dump mechanics. Instead, growth came from traders recommending it to other traders. That's a rare signal in crypto. We also saw consistent metrics: increasing active traders, repeat usage, and rising average trade size. Those are signs of real utility, not just hype. Part 3, where the hype comes in. But let's be honest, hype does play a role. The expectation of a future token airdrop created speculative behavior. Traders increased volume not just to trade, but to position themselves. This doesn't mean the platform is fake, but it does mean that some growth is forward-looking, not purely organic. The real test will come when incentives change. Part 4. The real verdict. So, organic growth or hype? The answer is both, but with a strong foundation. Hyperliquid solved a real problem: professional-grade trading on-chain. Hype accelerated adoption, but product quality sustained it. That combination is rare and powerful. Future risks and opportunity. Still, risks remain: regulatory pressure, market downturns, and competition from both CEX and other DeFi protocols. Whether Hyperliquid becomes a long-term infrastructure layer or just a successful cycle depends on what happens next. If you found this breakdown valuable, hit the like button. It really helps the algorithm. Subscribe for more deep dives into crypto infrastructure, Web3 innovation, and market psychology. And comment below. Do you think Hyperliquid's growth is sustainable? Or are we still early in the hype cycle? See you in the next one.